Today we're going to be doing some technical analysis for the SPY Qs, Apple, Tesla, Amazon, and NVIDIA, and we're going to talk about some important things that could happen over the next week to possibly give us that bull run into the end of the year, because we're looking like we're at levels right now where if we start to break down, we could see that crash start to happen. First, we got to talk about the data. I did mention this Fed Jerome Powell talking at 4:35, and I thought it might be important, but right now, apparently it is mostly a, pre-written statement. So we will see if anything was said in that for you and, changes in what he is saying in tomorrow's episode. But right now that seems to be kind of a dud. But tomorrow we can see that we get durable goods and the GDP growth rate. And these are going to be very, very important. And as you can see, the previous months, we got 0.2 on durable goods and we got 2.1% on the GDP. Okay, so what we're seeing is huge increases in the, forecast or consensus for these numbers. And the thing is, if these numbers actually reach these levels, say 4.0 and 1.1, you're seeing major increases. And when these do increase, it actually signals the Fed that they might need to raise even further. So we really want to pay attention to that as we are talking about a pause in these videos. Now today we're going to actually start with Amazon, weirdly enough, and I'm going to give you that big thumbs up. So give yourself a big pat on the back if you're subscribed, and maybe even like this video, because last episode, that was yesterday, last night, we were talking about this left shoulder head and possible right shoulder forming, okay? And we are below those moving averages. We just draw this little line across, and all we noted here was if we start to break down below these levels, then we could head to that 200-day moving average before the earnings that come out after hours tomorrow. So that is actually going on Amazon, and it looks like we are going to see some kind of touch. As you can see, we're getting some kind of small bounce, so it doesn't mean we have to go touch it at this point. We could get some kind of retest for tomorrow, and then we'd have to see how earnings actually are reported, if they are good or bad news. But right now, we are seeing this further breakdown, and we could, based on this measured move here, we actually could see further downside, right? And look, it kind of lines up directly at this point here. So this is where I'm expecting buyers to step in if this does happen, and then maybe we can get some kind of reaction from that level. And if we do get some good news behind that, and that good news would most likely have to be a pausing of rates at this point, then we can see further upside. Until we get that news though, this could just be some kind of bounce. Now, I would like to also end the Amazon portion by just saying it's earnings. I do not know what numbers they are going to report. Some companies are reporting good earnings. Some companies are reporting bad. And the overall thing I'm trying to pay attention to is the consumer is still spending money, and most consumers will be spending their money on Amazon. So I do think there is potential for some kind of move off of this 200, but we're going to have to pay attention to the actual numbers that come out with the earnings. I just wanted to give you guys your thumbs up at the beginning, I start off on a good note, but right here we were talking about, how markets are and how they don't necessarily bottom out in one day. We don't see one day touch most of the time unless, something in the system or someone in the system is stepping in to save the market or something like that, like we saw with the COVID crash. But right now we're seeing that we are starting to dip down to lower levels, and we are testing the bottom of our trend here on the SPY, okay? This wedge that has seemed to be forming, whether we are going to continue to the upside or start to break down, it's kind of up in the air right now, right? We haven't touched the top of our weekly expected move. We haven't touched the bottom. It looks like we're pointing to that bottom. Tomorrow, if we do see those numbers, as in the GDP come out really hot, I think the GDP is going to be very important because that is a huge increase, and we could see that as some kind of reason for those rates to go a little higher. You most likely will see this start to get broken and come down and test these levels. Now, it's not to say that, game's over at that point. We could see buyers step in at this level because we are at the monthly expected move. We are at the weekly expected move, and we're not at the end of the week and we're not at the end of the month. We're coming into the end of the week, but we could see some kind of reaction down, and then maybe, just maybe, we actually see some buyers step in to hold this market up one more time. The reason I'm mentioning that on the SPY that we could head to lower levels is just because the Qs actually broke out of its continuation wedge that we had drawn here, and we've gotten some reactions from, and we're seeing that close on a daily below those levels. So we actually, the probabilities are starting to add up that we want to, go down towards that 200-day moving average, but we could hold up above that, right? Because our weekly is right in here. So if we do see some kind of breakdown tomorrow, we could see some kind of reaction. But we are at a level where buyers could step in. So it's not to say that we can't get some kind of bounce from this level, but it's just looking like with this breaking and the VIX now creeping right above 20 again, we actually could see a touch of this 200 down here on the Qs in the near future. Now, Apple, what have we been talking about? We've been talking about this purple zone. It's a very important zone, and we struggle to break below it in the past, right? So in the past month or so, we actually have struggled to break below this level, meaning closing below this level. Right now, we're holding above the 200, but if we do see that closing bar outside of this purple zone, you can see that would be closing below the 200, and we most likely will be heading to lower levels. It doesn't mean that we have to completely flush an Apple, right? Because we do have that earnings, and a lot of people won't dramatically sell before those earnings. Some people will have the thought that, Apple is going to report good earnings, and therefore we could see some kind of reaction from this zone. I do believe if Amazon reports good earnings after hours tomorrow and Apple is at lower levels, we actually could see a good reaction in Apple from that, because people do buy Apple products on Amazon. So that could actually be a good thing for Apple. The reason that we're paying attention to this level so much is just because if we do see some kind of reaction down to this level and then see another reaction upward with buyers stepping in, we would have a triple divergence playing out. Okay, so we would have a triple divergence there on the MACD, and we would have that triple divergence there on the RSI. So it will have some strength behind it if we get that move. And then after that happens, in order for this not to be just another bounce to go up in this zone and then get some sellers to step back in, we would need that good news. So at this point, we would need some kind of pausing from the Fed or just astronomically good numbers in these earnings. Tesla, what we were talking about was this level of 207.42 that I had marked for you for a few weeks now. And we did dip below that on Monday, right? And then we had kind of an indecision, but we're holding up above the 200 that day. So I was like, okay, this isn't the worst sign in the world. It's not the best candle, but it's not the worst sign. Right now, though, as of today, we did see that closing bar, and we're closing on the lows on the daily here. So we actually could see further downside in Tesla. What I'm mainly paying attention to is if we hold below this 207.42 or if we take out this low. I think if we get a firm closing below that level, then we could be in a little bit more trouble. But as of right now, we're not doing that, and we could see buyers step in kind of like they did right here. So we just really, on the bear side, we want to be paying attention to this low. And then I would say probably to the bull side, we want to be paying attention to if we're able to react well and get through this gap resistance and see if we can get to that gap fill soon. One stock that really struggled was NVDA, and we've been paying attention to this head and shoulders just like everyone else. And hopefully by now, if you're subscribed, you know my overall take. If not, you might want to, click into some of my videos and see, because I do explain a lot of this. But we were pretty much saying once we saw this bar right here that we most likely are going to head down and try to test the bottom of our neckline. And we haven't directly done that, right? We're holding up right above it. It doesn't mean that we can't see some kind of reaction. We are getting some sellers coming in the post market. But it doesn't mean we can't cut this low either. Like, we can't cut below this level and then buy back up, right? So we want to be paying attention to how price reacts once we do get to this point, and we want to see how price reacts if we do break below it. If we start to buy back up, that would be a good sign. But if we do start to close below it, then you are starting to look for that 200-day moving average. And we've talked about that before, how there's not a lot of buyers in that area. So you are going to see a pretty dramatic free fall. But we do have this resistance, right, or this support right in here. So if we do drop down, look for this level of like 373, 374 to hold up a little bit. And then at that point, you're looking for, are we just going to get that retest and then break down to lower levels? Or are we going to possibly come down to this level and get that Fed pause? So that's what we're going to be paying attention to. And if this did happen, you would also have that divergence we've been talking about on a lot of stocks. You would have that divergence setting up for you on NVIDIA. So I just really think you need to pay attention to that. Really, it's not if this breaks, right? If we get that, GDP news coming out tomorrow or durable goods coming out very hot, then we can see a lot of these tech stocks sell off. But it's more about how they react after the sell-off. If buyers step in and we're able to see a recovery and get some kind of pausing, that would be good. If we don't, then you're looking for that retest and possibly a break of that prior low. The reason I'm talking about downside is kind of because of the VIX, right? Because the VIX today, we actually saw this little trend that we were paying attention to break to the downside yesterday. And then today you see we are creeping back above 20. And when we are above 20, that just means there's going to be some volatility in the market, so we could see some big swings up and down, and you're noticing that in the charts. But right now we are seeing the VIX get back above 20. We rejected the cross on the MACD on the daily, so this means that we actually could see one more push in the VIX before it's all decided. So we really want to pay attention to the VIX, and we're closing above 20, and that's why you'll hear me talking about, some downside moves. Now, the VIX still hasn't given us that signal in order for us to get that major crash, and that signal would be the 200 starting to curl up and the 50 crossing that. We've talked about this a few times, but it's just important to repeat so you guys can pay attention to it daily. We have not gotten that signal yet, and if we do get that signal, I will be notifying you. But right now, we are above 20. We could see some extended move, and if we do get that extension in the VIX, just be paying attention to, your 50 and the 200. Another reason you might be hearing me talk about some bearish things, right? Some downside is because we do have that data coming out tomorrow, and the projection is for some, high numbers, and those are known to, increase the fear that we are going to see another rate raise. So if we do get that rate raise, we are kind of getting hinted that that might happen, at least with that data, because we actually got that rejection on the daily crossing of this MACD here on the 10-year yield. So this 10-year yield actually can start to move up pretty quickly, and we saw that happening today. So we did actually hold up on that 9-day moving average. And if this does start to break this high, we are going to see some downside in the market. And as we switch over to TLT, the opposite of that 10-year yield, okay, so we wanted to pay attention to, and I've been telling you to pay attention to, this 8250 level, and I just wanted to show you real quick why I've been paying attention to that level. You can see at times in the past, we've really held up above those levels. Now, we've cut below it a few times, right? We've cut below it a few times, but overall, this level here, we've been able to use it as support a few times, and these kind of, dictate why I was thinking that level was very important. You can see we held up for it, up above it here in 2006. We actually held up above that level in 2007. So we could see us hold up from that level one more time. And on TLT, you can see we have a little bit of a channel we've been kind of selling in, okay? So we are coming into that 9-day moving average. We actually did look like we wanted to take that back, and that was kind of given away today with this nice red bar here. So all I'm paying attention to with TLT is if we do see some kind of reaction, say yields going higher with those numbers tomorrow, then we actually could see us come down into the bottom of that channel, somewhere around that price point of about $80 to $81. And then maybe at that point, TLT traders start to step in. They see it as a good price, and then we start to bring those yields down ourselves. So we really want to be paying attention to TLT when it comes to those yields. And you can see if we get some kind of quick turn down and then a recovery, we would actually have a little, triple divergence here on the MACD. So if we do see this triple divergence down here set up and confirm, we actually could see this start to go up, which is why I'm kind of hinting that we could see some kind of pausing in the near future from the Fed. The overall takeaway from this video is things do not bottom in one day, and now we're seeing another dip to lower levels. Now, whether we're going to be able to see some buyers step in and hold us up, or whether we are going to break down a little further with that data that we get tomorrow morning at 8:30 a.m., we'll have to see. But it looks like the projection right now is that we are going to see data that could potentially raise those yields. So be very careful out there. I still wish you all the luck in the world trading tomorrow, okay? Have a good night. Peace.